Why CICT is the best Singapore REIT for passive income, high dividend and strong growth potential. Want to grow your wealth without the headache of managing properties? Imagine earning passive income from some of Singapore's most iconic shopping malls and office buildings, without ever dealing with tenants or maintenance. Sounds great, right? Well, that's exactly what investing in real estate investment trusts like CapitaLand Integrated Commercial Trust, or CICT, offers you. Today, we're diving into why CICT is a top-tier REIT for both new and seasoned investors. We'll break down how it generates stable income, its latest valuation, and whether now is the right time to invest. Stick around until the end for an in-depth look at whether CICT is a worthwhile addition to an investment portfolio. Before we dive in, don't forget to smash that like button and subscribe to Wealth for You. Let's build that cash flow-rich future together. Disclaimer: this video is for informational and educational purposes only and does not constitute financial advice. All investments carry risks, and past performance is not indicative of future results. Please conduct your own research and consult with a qualified financial advisor before making any investment decisions. Chapter 1. A quick crash course on REITs. First things first, what exactly is a REIT? A real estate investment trust, or REIT, is a company that owns and manages income-generating real estate properties. Investors like you and me can buy shares in a REIT and receive dividends from rental income, just like how landlords collect rent, but without the hassle of property management. Why do people invest in REITs? 1. Passive income. REITs distribute at least 90% of their earnings to shareholders as dividends. 2. Diversification. Instead of buying just one condo, you get exposure to multiple properties with a single investment. 3. Liquidity. Unlike physical real estate, you can buy and sell REITs easily on the stock market. Chapter 2. Why CICT is a top pick. Now let's dive into why CapitaLand Integrated Commercial Trust, or CICT, stands out as one of Singapore's largest and most resilient REITs, making it an excellent choice for investors seeking stable and growing passive income. Singapore's largest and most established REIT, CICT, boasts a market cap exceeding 14 billion Singapore dollars, cementing its position as the blue-chip leader in Singapore's REIT landscape. Its size and strong financial backing make it a reliable long-term investment. When you invest in CICT, you're essentially becoming a part owner of some of Singapore's most well-known and high-traffic commercial properties, including Ion Orchard, a luxury shopping destination in the heart of Orchard Road; Bugis Junction and Bugis Plus, popular among young shoppers and tourists; Plaza Singapura, a well-loved mall conveniently located at Dhoby Ghaut; Raffles City, a premier integrated development with retail, office and hotel components; Westgate and IMM, key retail hubs in the western region, with IMM being Singapore's largest outlet mall. Consistent and stable rental income. CICT maintains one of the highest occupancy rates in the market, with 99% of its retail space rented out. This ensures steady rental income, backed by prime locations and strong tenant demand. Well-diversified and low-risk portfolio. 94% of assets are based in Singapore, giving investors strong exposure to the country's resilient economy. A small international exposure, 5 to 6%, in Germany and Australia adds diversification while keeping foreign risk minimal. Unlike REITs with heavy overseas exposure, CICT's portfolio is anchored in a stable and growing market. Attractive dividend yield and income potential. Based on the latest closing price, CICT offers an attractive dividend yield of 5.48%. This is significantly higher than fixed deposits and CPF ordinary account rates, making it a compelling choice for income-focused investors. With potential rental growth and lower interest rates on the horizon, CICT's income-generating ability is expected to strengthen even further. With its solid track record, premium property portfolio, and reliable dividends, CICT is one of the best REITs in Singapore for those seeking stable passive income and long-term growth. Chapter 3. Is now a good time to buy? Let's talk about valuation and timing to determine whether now is the right time to invest in CICT. Right now, CICT is trading at around $1.99, which is approximately a 7% discount to its net asset value. This means you're buying quality assets below their true worth, providing a good margin of safety. With interest rates expected to decline in 2025, REITs like CICT will benefit from lower borrowing costs, leading to higher earnings, better distributions, and potentially higher stock prices. While markets are anticipating rate cuts, several factors could delay or reduce the extent of these cuts. 1. Stubborn inflation. If inflation remains high, central banks may hold off on rate cuts or slow down their pace. 2. New tariff policies under President Trump. Since taking office, President Trump has introduced new tariffs on imports, particularly targeting China and other major trading partners. These tariffs are driving up the cost of goods, potentially increasing inflation, and forcing the U.S. Federal Reserve to maintain higher interest rates for longer. 3. Geopolitical tensions. Global uncertainties, such as conflicts or supply chain disruptions, could impact market stability and monetary policy decisions. 4. Stronger than expected economic growth. If the economy remains resilient, central banks may decide to delay cutting interest rates to prevent overheating. If you invest now, you're locking in a solid 5% plus dividend yield, with potential for rental growth as CICT continues to optimize its assets. Regardless of short-term rate fluctuations, CICT's high-quality properties, strong tenant base, and stable rental income make it a strong long-term investment for passive income seekers. Chapter 4. Who should invest in CICT? So, is CICT right for you? New investors. If you're just starting out and want a low-risk, easy-to-understand investment, CICT is a great choice because it owns assets you can see and visit. It has a strong track record of stable dividends, and it's backed by CapitaLand, one of Singapore's largest real estate players. Seasoned investors. If you already own stocks or other REITs, CICT is a great dividend stock to add to your portfolio for diversification. Final thoughts. So, should you invest in CapitaLand Integrated Commercial Trust, or CICT? If you're looking for a blue-chip REIT that provides reliable dividends, strong asset quality, and exposure to Singapore's top commercial properties, CICT is a solid investment choice. With its high occupancy rates, steady rental income, and potential upside from future rate cuts, it remains one of the most stable REITs in the market. What do you think? Are you investing in CICT, or do you have other REITs in mind? Let me know in the comments below. If you found this video helpful, give it a like, subscribe to Wealth for You, and hit the notification bell so you don't miss our next video on building wealth through smart investing. Take care and keep stacking that cash flow.